Hey, I'm Matt Hudgens and he's Dave Mulvaney and this is Profitability MD. Dave, how you doing today, buddy?
I'm great, Matt. How about you?
I am doing great. This is episode 154 and we're kind of doing a relaunch here. So first of all, it's the 4 pillars of wealth revisited. We talked about the 4 pillars of wealth somewhere, I think around episode 3 or 4. But we're also kind of revisiting it now and we're kind of relaunching the podcast with kind of a little different format, right?
Yeah, because the belief is really that any entrepreneur can, achieve financial freedom when your foundation is built on these 4 pillars. And of course, you don't have to have all 4 pillars to have wealth, but if you don't, what can end up happening is if the pillar that you've built your wealth on gets kicked out, you can end up in a big problem. And so, yes. This is not something that I think that you ever complete. It's more of a journey. So I will bring up a graphic on the screen just so we can kind of talk through it. And
perfect. That's good. All right. So the 4 pillars of wealth we're talking about, these are business owners. So you want a business and the business supports your lifestyle. That's pillar 1. So the business makes money. You support you and your family off of that. But what you need to do is have the business create more than just money for you to live off of. You got to eliminate your debt. You and I always talk about paying off the debt, especially the bad debt, right?
Let's focus on the bad debt because, that's okay. First of all, there is a big difference between good debt and bad debt. How do banks create money? They loan money. Well, if you're able to leverage money, which we'll talk about in the real estate area, that's good debt because what you're doing is you're using leverage. So there's good debt and bad debt. I typically say if it's for your lifestyle, it's bad debt. If it's for accumulating cash flow, that's good debt. So
that makes sense.
And one of the things I was going to say one thing about having a business. If you're a business owner and you've been in business 3 years and you've got at least $100,000 of income from your business, you have everything it takes to build out these 4 pillars. So it's not really, this is not some far out thing to where you got to, start in this high income area. It starts at about 100K. I think under that, you're still struggling to survive, I think. So
got to get the business going. Right. So we'll go through the 4 pillars kind of quickly, and then we can fill back in the details. So the business is pillar 1. So you have a business and it generates income for you and your lifestyle, support your lifestyle, pay off the bad debt. Then we want to do pillar 2, and not in any particular order, is real estate. And typically we're talking about revenue producing real estate, right? And so that can be rental property. Most of the time it's your own office building, right? So if you're a dentist, you own your own office. If you're an HVAC, you have your own office and warehouse. It's a revenue generating piece of real estate. It's not your, nice house that you live in day to day. That's not it. We'll come back to that. Number 3 would be a retirement. Okay, so you got to fund your retirement with these tax deferred investment accounts, right? 401ks and cash balance plans, defined benefit plans. You want the business to generate enough income where you can put money away and save it on a tax-free basis, because that's one of our other big things is want you to make more and pay less in taxes. And then the 4th is what we call wealth accumulation, and that's where everything extra goes. You put that money in the wealth accumulation account, and so then you build up the wealth through there, and that's investing in stocks and bonds, but it's also kind of a reserve. So if anything goes wrong with the business, you could borrow money from the real estate, you could borrow money from the wealth accumulation account, you could borrow money from your retirement account. It's kind of your last option.
Yeah, and wealth accumulation, I like to call the wealth accumulation also the cash flow, because wealth accumulation can include buying businesses. It can investing in other people's real estate investing. What it really boils down to is your money's now making you your living. You're now in a position where you don't need the business anymore. You don't necessarily need your own real estate investments. You could be investing in other people's investments. This is now you've got this giant nest egg and your money's out there doing all the work. So you're no longer working, your money's doing the work.
Right. And so the reason we talk about the 4 pillars is the mistake that I see all the time is most people have a business and they don't really even have a business, they have a job. They really just have enough money to pay for their lifestyle, and they're not accumulating any wealth. They're not putting together a retirement plan. They're not building a real estate portfolio. They just have one business. They magically think somebody's going to come along and buy them and pay them $10 million.
What was the
Right?
stat you sent to me a couple weeks back, Matt? It was something about how here it is, I think. According to the Kauffman Foundation, only 6% of all entrepreneurs ever achieve a six-figure business success, and only 2% ever achieve seven figures. So more than 50% of all business owners never exceed $25,000 each year. So if you're, like we said earlier, if you're in the area where you're making 100,000, you've been in business 3 years, then you've now you positioned your business to succeed in all of these areas. If you're struggling you're making 25,000 in your business and you're just barely getting by, and your wife is working 2 jobs to support you and your business, then you need some help in the marketing, sales and marketing area. And we've got more than enough videos on our YouTube channel for that. Marketing.
But that's what we should talk about. So the idea now, so we're talking about the relaunch. So what we want to talk about is have more conversations about building wealth, using your business to generate wealth and to build the wealth, right? And so with the 4 pillars, you're exactly right. If your business isn't generating enough cash flow, we're great coaches for that, right? Like you said, we've done past episodes. We'll do more episodes on the marketing and how to grow your business and make it, we always talk about want you to make more, work less, and pay less in taxes. We've got that. We can help you coach up your business to make it a self-managing company, to make it a kind of the business of your dreams. We can do that. If you need help on the real estate side, we're going to interview real estate experts. Dave does a lot in real estate. I know enough to be dangerous. So we'll interview some real estate people to help us build your wealth using the real estate. And we'll interview some retirement planning experts, myself included, where we could talk about how you can put money away pre-tax, defer the tax. And we'll talk about wealth accumulation, how other business owners have accumulated their wealth. So we're going to change the format. We're going to talk to people and how they're using the 4 pillars or their version of the 4 pillars to build their wealth through their business. It just doesn't work I shouldn't say it doesn't, very rarely does it work when you have one business and then you sell it. One of my best examples, I love this one, and it was almost by default. So I had a client where this has kind of been mulling in my brain for years and years and years. And really where it really hit me, and this might've been all the way back in the 90s, early 2000s, I had a client that had a restaurant business, a barbecue business, and they go to sell the business, and turns out the real estate was more valuable than the business. They had 3 barbecue stores and they owned the real estate in all 3 locations. And this is around the Atlanta metropolitan area. And it turned out that the barbecue business was worth this and the real estate was worth 3-4 times that. And so it turns out that the more valuable part of that was the real estate, right? We've talked about, I think in the past, McDonald's is really a real estate company, right? So a McDonald's franchisee has a McDonald's store that generates money for them, but McDonald's, the corporation, is paid the rent on the sales of McDonald's plus a rent for the location itself. They bought the real estate and they use the McDonald's burgers to pay for the real estate, right? That's what we talk about by building wealth through real estate, right?
It's a and when I say building, additionally, when you're building wealth through real estate, it is. I'll use an example of my business. When I built a company for basically 17 years, and it was very successful for most of those 17 years, but it got too top heavy, and it was at a time when the economy had changed in 08 and 09, and we started taking on a lot of debt, and that business went under. But it was the real estate that my wife and I had that was able to sustain us, so that the loss of the business wasn't the major, because a lot of people lose a business and that's it. They
got all their eggs in one basket. That's exactly right. They got all their eggs in one basket.
I had the retirement accounts. So I had done the things that saved my butt, thankfully. And that was because I had good advice, financial planners, other real estate investors. And so, what I like about the real estate market today, that is very different than what it was years ago. So I did single family investing almost in small multifamily. We did a couple of duplexes and triplexes along the way, but I really did investing for accumulation.
Right.
or appreciation, wealth accumulation through appreciation. Today, I look at real estate investing very differently. I look at it for cash flow because nobody really, like when you get to retirement years, like if you want to retire at 60, let's say, you really don't care. You do care, but you really don't care how much like nest egg you have. If you've accumulated let's just say a $25,000 a month of cash flow from your investments, well, you don't care what the number is on the balance sheet. You care that you've got this consistent income, and that can come from your retirement accounts, because once you're 59 and a half, you can start pulling that money out. And if you're still acquiring real estate, you've got depreciation and other things that if purchased in an LLC, and you can create tax advantages. Now this show's not giving tax or investment advice. Let's put, this is I always have to be cautious, right? So
right. But no, you made a great point. And again, we're going to talk about that. There are different ways to use the real estate, right? So like I literally had a family member who, and actually got a buddy right now, they buy real estate not for the cash flow, right? They buy a rental property at break even because they know eventually it'll be positive cash flow. 3 years from now, we can raise the rates, or typically a rate on a residential property goes up 3%, 5%, 10% a year, depending on where you are. And then eventually they're using the rent to pay down the debt. So literally 20 years later, you have this house that's completely paid off. And so I had my aunt and uncle, and they had, I think it was 3 or 4, I think it was 5. They did 5 rental properties, right? They worked for the government, never made more than $85,000 a year. They bought 1 rental property about every 2 years. And at the end, they ended up with 5 rental properties. But when they hit retirement, actually, they used 2 of them to pay for my cousin's college, right? So they sold these first 2, and the last 3 were all paid off. So they were able to sell those, and that's was their nest egg for retirement, plus the government pension. So there is a way, there are different ways to do it. I don't, invest for cash flow and invest for appreciation. Flippers invest to flip, right, to make the quick profit. So we can build the real estate portfolio, different areas that we can explore. You're exactly right.
In many cases, Matt, the real estate, like for many people, real estate is the business too.
Yeah,
so
exactly right.
It can be that, many people are real estate agents who become investors. And with real estate, there's a million, well, not a million, but there's many different ways. I know I've been making a list. There's over 100 different ways to acquire properties. In those 100 different ways, what you were talking about is stabilizing an asset. So you buy it not for cash flow, but you buy it that's buying for long term and that appreciation. Right. But typically you put 20% down, and again, you're leveraging. That's something you can't do in the stock market. It's something you can do in any other market, which is why I feel that real estate is arguably one of the better. I don't want to say it's the best investment, but it is.
It's just one of the 4 pillars, right? The advantage of real estate is the leverage, right? You only have to put 20% down to control, and you get depreciation, which is a tax benefit. We'll talk about that later. And you get the appreciation of the entire amount, right? If it's a $1 million piece of property and you had to put $200,000 down, you got the $1 million that's appreciating at 2, 3, 5, 10%, not just your 200,000. So you got a bigger piece of property that's growing, even though doesn't sound like exciting. Oh, it's 5%, it's 10%, it's 3%. Yeah, but it's on the $1 million, not your 200, right? Your down payment. Plus you get these depreciation and tax benefits. Plus we get cash flow benefits. So there are all kinds of benefits with the real estate, and why we think it's an important pillar, right?
And you don't need money to buy. I mean, you don't even need the 20%. You can buy real estate without any money.
This is good.
Okay, many entrepreneurs, let's talk about your own building that you're in. So a lot of times an entrepreneur will rent a building, and you've been in there 5-6 years, and let's say it's an industrial building, and there's 3 other tenants, and you're in there with that tenant. Well, you talk to the landlord and say, hey, I'd like you to finance this to me. And so they, many times the landlord owns that building free and clear. Now they're in their late 60s or early 70s. They don't want to be a landlord anymore. So they say, you know what, I'll finance it to you. And in many cases, they won't even require a down payment. And so that's 100% leverage. Now you control an asset. And in most cases, in many cases, a lot of times those other people are paying the majority of your mortgage now. And so real estate offers something that no other area does, but a business offers probably the most rapid ability to get the most amount of money. Because if you're making 100,000 and you want to make more, all you need to do is have a better message, know who your audience is, and get that message in front of more people. And then you can grow your business and your profitability. We've spent the last almost 3 years talking about how to build your business and make it profitable. Now we want to say, okay, now you know how to make your business profitable. Now what are you going to do when it's profitable to get your life back, to take your time? Like you, Matt, you've got the lifestyle that most people would dream of. You could arguably most of the year, except for at the end of every quarter when you focus on, working with your clients, but most of the year you can play golf 3, 4, 5 times a week and no one ever knows you're gone.
Right. That's a whole different story. We'll get into our own. I thought that'd be a good episode where maybe next episode we talk about you and how you use the 4 pillars, and then we'll do another episode for me and how I use the 4 pillars. So that's kind of the format. We're going to go more into how to build wealth using your business as the generator, right? And so we want to interview some other people who have done it, maybe some other experts that are experts in each of these areas, and just let's talk about how to use the business to generate wealth. And as you mentioned before, the business might be real estate. That is the business, right? The business might be a real estate agent who gets into rental property owning and property management, all that type of stuff. So the different areas that we're going to go down and to explore. And next week we can go into your stuff and how you've built it with the 4 pillars. And after that, I'll go into mine and how I use the 4 pillars to kind of build my wealth. Because I just think it's just key. Most people focus on the one thing. This is the radical idea. So the business, real estate, retirement, wealth accumulation. Those are the 4 pillars. Every time I mention this to business owners, it kind of rocks their world. They've only thought about their business as it. Like, I just got one thing, it's my business, and that's all it is. And our point of this is your business is a great way to generate cash flow. It is a great way to generate wealth, but it is just one thing. It's not diversified. As you were talking about, you had a business that had rough times. If you have the 4 pillars, you can weather the storm, right? Your business might have a tough time, but then you got the real estate, retirement, and wealth accumulation you can use to stabilize or borrow for the business. If the real estate, it hits has a bad, well, you still got the business, the retirement, and the wealth accumulation, so you can weather the storm. If the markets go down, that's where your wealth accumulation, retirement is. Well, you still have the business and the real estate, right? So even if the stock markets go down. So the point would be you're kind of insulating yourself and using your business as a tool to generate wealth. Again, most guys, I got a business and I got a business. Well, really, they don't have a business, they got a job, right? Just enough to pay their lifestyle. And then they're wondering one day, while somebody doesn't pay me $10 million. That's not going to happen. Very rarely is it going to happen. But you can accumulate that type of wealth over time using these 4 pillars. And that's really the point, is we want to siphon the wealth off, build the wealth with the business and the 4 pillars to accumulate that wealth over time. It's not some magic, hey, we're going to build this business and flip it and we're done. That does happen. That can happen. It's very, very rare. We talked about the stats already, where only 2% get to be above $1 million in revenue. I don't even think that was earnings. I think it was like revenue, $1 million, right? Yeah. And so, but you can accumulate that kind of wealth by using your business as the tool, as the machine, as the mechanism to fund your lifestyle, to fund your real estate investments, to fund the retirement wealth accumulation. And then, as you were talking about, you start to get the money to work for you, right? So the real estate then can generate its own cash flow to invest in more real estate, right? Or to invest in your business or another business. You always talk about buying another business, right? Well, so the real estate can be its own cash flow model.
There are business owners that their whole business model is to acquire other businesses. So, okay, that takes cash. Well, in most cases, it takes a fair amount of cash. Buying other businesses, just like buying real estate, doesn't always take your cash, but it does take cash to buy businesses. So that means you've got to have an established business. But some people's business, like Dan Pena talks about, that's his whole business model. That was his whole business model. He started a company that really had nothing. He got one contract, and then he started purchasing his competition and building. He built $1 billion business from starting with a business that its whole purpose was to acquire other businesses, which is part of wealth accumulation. He was purchasing other cash flowing assets or businesses that he could add value to. That's what you do in real estate. If
Yeah.
in many cases, if you purchase multifamily or mini storage, I really like mini storage and multifamily, but if you purchase an asset that's not brand new, well, you can add value to that, and that can elevate the rents, and it's all based on income is what creates the value in real estate. And again, the thing about the business is if you have employees, and you will, because again, think who, not how, one of the best ways to keep people is benefits. And one of those benefits could be a 401k where you do the maximum match allowable. So it allows you to take some of your profit and really get good employees, because they're like, man, we got a phenomenal 401k. We got a phenomenal benefits plan. So a business that attracts the best employees is going to be undoubtedly grow, because everybody says I can't find people, and then you look at what they're paying. Well, that's why you can't find anybody, because you don't pay enough.
No, that's exactly right. That is exactly right. And we'll get into those too. People, business owners right now, that is the hardest issue that they keep telling us is the employees and finding good people. And it is difficult, but it is possible, right? And especially when you have willing to pay the appropriate amount or pay for performance. I'm a big pay for performance, right? If they come in and are generating revenue, let's share that with them, right? Because it's just revenue you wouldn't have had if they weren't there, right? A lot of times we talked about it before, and it's an investment in people, right? So I've talked about before in one of our podcasts where you have grow your business, you hire an assistant for your salespeople. So your salespeople can spend more time selling, and the assistants can be checking the orders and where the shipments and the arrival times and the billing and yada yada, and let your sales guys sell, right? That is somebody who you should pay a good amount of money for that assistant, because that assistant allows more revenue generating activities from the salespeople, right? So they're not a cost, they're an investment, because they make your salespeople more productive. So you got to kind of change your mindset on that kind of stuff too.
And the entire real estate and retirement business is based on pay for performance. I mean, both those sectors, you go into the retirement business, you want to make money. Well, you better go accumulate X amount of clients so that you can bring revenue in. In the real estate business, you better sell X amount of houses so that, if you're going to sell houses or flip or whatever, it's all based on performance. So your business should not be any different in that when you have somebody that's good at acquiring customers, you should pay them accordingly, especially, and if you're not profitable, that's a whole nother episode. That's why we talk about this. The show is Profitability MD, is because it's about making your business profitable so you can invest in these 4 areas. So
yeah, in these 4 areas. And again, the idea is the business is the tool, the business is the mechanism. A lot of business owners, that's all they have. And they really just have a job, right? Because they can't take vacations, or it doesn't run without them. We've talked about that as self-managing companies, self-growing company, whatever the terms the gurus use, but basically a business that can run by itself, and you can take vacations and it won't go to heck, right? And that's what you want to generate. So, and the idea again, so we're going to talk more about using your business to generate wealth. We will talk about how to increase your revenue in your business, right? Because that's the tool, that's the mechanism. We'll talk about real estate and how to use real estate as a wealth building tool. We'll talk about retirement planning and how your exit strategy of your business and how to accumulate wealth, tax deferred in the retirement packages and what are out there. Talk about the wealth accumulation, how to use your excess cash flow to invest in stocks and bonds and cash reserves to fund the other pillars, right? So a couple of things here we're going to say would be, one, we're looking for more guests. We want to interview guests. That's the kind of format we want to change to, is more guests. So we want to interview business owners that have been in business at least 3 years, make at least $100,000 a year, and just love to have a conversation with you about how you're using the 4 pillars, or if you're not using the 4 pillars, how you could use the 4 pillars to generate your wealth. So what are you doing with your business to generate wealth? How are you using your business to generate wealth? So if you'd like to be a guest, you would reach out to Matt at profitabilitymd.com, Dave at profitabilitymd.com. We'd have a little we're going to change this, about a 30-minute format, which what it is now, and we'll have a little Q&A session, and you and your business, and spotlight your business and how you're using your business to generate wealth. You might have some ideas that we hadn't thought of. We might have some pointers that can help you generate wealth using your business already, right? We're also looking for experts that are in the areas, right? We're looking for real estate experts and business growth experts, right? Like you and I do the coaching. We're looking for the experts, a marketing expert to help people grow their business, a marketing expert for the real estate, marketing experts who help others grow their business to build their wealth, right? So we'll go to the interview some experts. And then we'll talk about our own experiences. And we're going to do an interview with Mulvaney, Dave here, and how he used the 4 pillars, and me, I'll do one, how I use the 4 pillars. But the idea is, that's really what our core is. We think that any business owner, any entrepreneur can use their business as a tool to generate wealth, to accumulate wealth over time, right? We've even talked about before that retiring in your business, you can put this whole thing together where in 3 to 5 years, you've got your well-oiled business machine that's funding your lifestyle, your real estate, your retirement, and your wealth accumulation. You can get that done in a shorter period of time than you think. You'll have some great stories, I know, next week when we talk about the real estate stuff and how some people who have done it really quickly to get the stuff going. So you can do this quicker than you think. So we're just challenging you, revisiting the 4 pillars: business, real estate, retirement, wealth accumulation, which is basically everything else. And the idea is we want to interview guests. So if you want to be a guest, Matt at profitabilitymd.com, Dave at profitabilitymd.com. We're going to also, we've got our list of people that we'd like to interview to be on the show, of experts and people who have used their business to generate the wealth, that are doing it now, that have done it and already sold their business and retired. I've got some of those people that we can talk to. So that's what we're doing. And then Dave and I are still doing, we have our group coaching program, right? So you want help growing your business, on building your wealth, using your business to generate wealth. That's what our coaching program is all about. Make more, pay less in taxes, take more time off. That's our group coaching. So that Matt at profitabilitymd.com, Dave at profitabilitymd.com. So now we've got our new download your copy of the 4 pillars infographic, right? Dave's put together a nice infographic. So you can go to profitabilitymd.com, where you can download the infographic. It's a nice little graphic that explains the 4 pillars in a little more detail. Did a great job of that. That looks awesome. And then, we still offer our profit acceleration session, right? So if you're looking to generate more profits for your business, we still have that profit acceleration session, how we can find any business owner $50,000, $75,000, $100,000 without spending $1 more on advertising and marketing. That's a profit acceleration session. And that's Matt at profitabilitymd.com, Dave at profitabilitymd.com. But the whole point was we got a little sidetracked. We got way down in the weeds on building the business, which is great, but we want to kind of back up and say, use your business to generate wealth. That's really what we want this show to be about, right, Dave?
Yeah. I mean, I don't think we can stress it enough, is that once you know how to build a business, it can become second nature, and we know how to do that. We can help you with that. But both of our passion, we're both in our 50s. And our passion is getting you to the position where you don't have to be in your 50s to build wealth. You can build wealth in your 30s. And what happens when you do it right is your business has all of this value because it, like you said earlier, it's self-managing. And a self-managing business has far more value than the one you work for, because the one you work for keeps you stuck in there. And when it's time to sell, typically after a major life event, you end up with a business that doesn't have value. And I say a major life event, you might have a heart attack and can't go back to work. And then your wife is forced to sell the business. And that's not the time to sell the business. You create a cash flowing business and you can fill in the 4 pillars. So
yeah, and exactly. We talked about that throughout our growth. You're building this business to be, managing itself, and you're just doing your unique ability or A+ activities, right? If you're a really good sales guy or you're a really good networker, that's what you should be doing in your business. And you should be who, not how. We mentioned that before. You should find people to be the controller, the HR department, the accounting, the sales, if that's not your thing, right? But what that also does is it makes work more fun, right? Because you're just doing your unique ability, your A+ activities. These are things that you do that you enjoy, that make money. And as you do that, the business becomes more self-managing, which also, like you just said, increases the value, right? If you've got a job and you're not replaceable, right? Where somebody buys your business and they can't run it without you, it doesn't really have a lot of value. But that's also probably a lot of stress on you as well, right? You want the business to be able to run without you, or for you to just have your key role and they just hire that one key person. Again, that's about how to structure the business to be self-managing, self-maintained, self-growing, working on your unique ability, your A+ activities that are money generated that you enjoy. we could get that honed down, and then you use it to build the wealth along the way. And this can be done, like we said, much quicker than we talked about, because it just has to be on the right path. Once you can get there, and once you get there, you can see the path. Hey, as long as I keep doing this, the wealth will be accumulated, right? As long as I generate excess cash flow, now I know how to do it. Now I know how to grow the business or run it more efficiently. And then I know how to take the cash and buy real estate, or take the cash and do the retirement account and the wealth accumulation account. And you can get there in a much shorter time frame. 3 to 5 years, you can do what we call retiring in your business, where you're still working, but you're pretty much retired because it's kind of self-maintaining. So anyway, this is where we want to head to. It's a lot of fun. This is what Dave and I really have a passion for, is using your business as a tool to generate wealth, right? That's what's fun. And we know how to do that. And I want you to start thinking about that as your business is just one of the 4 pillars. It's just one of the 4 pillars. You got to start thinking about the other pillars to generate the wealth. And it's possible, really easy possible. So get in business more than 3 years, make more than $100,000 a year. You're already successful, but you've got the basis in order to take it to the next level and start building out the 4 pillars. Good
Awesome
stuff.
All right, Matt, have a great day.
All right, see you.
Soon. Okay, bye.